Hello everyone, welcome to cryptocurrency mobile mining and trading. I'm Dixon, and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable, real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. Let's explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we dive into today's major news, if you're new here, or even if you've been watching for a while, please do me a huge favor. Go ahead and hit that subscribe button, give this video a big thumbs up, and most importantly, smash that notification bell. That way, you won't miss any of our real-time updates, which, in the fast-moving world of crypto, is absolutely essential. Your support helps the channel grow and allows me to keep bringing you this valuable content. Alright, let's get right into the big story of the day. A huge development is happening in Europe that could change the game for many crypto traders. LeverageShares is set to launch the first ever 3x and -3x Bitcoin and Ether exchange-traded funds, or ETFs, in Europe. This is a landmark moment. These products will be listed on Switzerland's prestigious SIX exchange and are scheduled to go live next week. So, what does this actually mean for you as an investor? Let's break it down. The new lineup will include for distinct exchange-traded products, or ETFs. You'll have a 3x long version for both Bitcoin and Ether, and a -3x short version for both as well. These aren't your typical, standard ETFs. These are a special type of fund designed to amplify the daily returns of the crypto they're retracking. They achieve this by using complex financial instruments like derivatives and debt. The goal is to deliver 3 times the daily performance of the underlying asset. So, if Bitcoin goes up 1% in a day, the 3x long ETF aims to go up by 3%. On the flip side, if Bitcoin goes down 1%, that same ETF will go down by 3%. The -3x short ETF works in the opposite way. If Bitcoin falls by 1%, the -3x ETF aims to rise by 3%. It's a way to bet on the price going down. This potential for magnified profits is incredibly attractive, but it comes with a very important warning. It also dramatically increases the risk. Losses can be amplified just as quickly as gains. So these are definitely not for the faint of heart or for beginner investors. They are high-risk, high-reward tools. Now, the timing of this launch is what makes this story particularly fascinating. These highly leveraged products are coming to market at a time when retail demand for crypto ETFs has fallen off a cliff. So far in November, a staggering $4 billion has been withdrawn from Bitcoin and Ether spot ETFs. To put that in perspective, that's already higher than the record outflows we saw back in February. It seems like many retail investors are getting spooked and pulling their money out. Bloomberg intelligence analyst Eric Balcones, a really respected voice in the ETF space, commented on this on the social media platform X. He said the timing of this launch is, and I quote, either really good or really bad depending on your POV. And he's absolutely right. Launching a product designed for high-risk speculation when the broader market is fearful could be a genius move to capture volatility, or it could be a complete disaster if the market continues to trend downwards and scares everyone away. It's a bold move, no doubt about it. Let's talk more about the market conditions these ETFs are being born into. As I mentioned, these high-risk ETFs are set to start trading after a period of steep declines across the entire crypto space. We've seen both Bitcoin and Ethereum fail to hold their critical support levels. Bitcoin struggled to stay above $90,000, and Ethereum couldn't maintain its footing above $3,000. More recently, Bitcoin's price dropped below $84,000, which triggered a wave of selling from many regular investors. As of the time I'm recording this, Bitcoin is trading at around $85,316. That's a drop of about 2.19% in the last 24 hours. following a massive sell-off across the market. Ethereum is currently trading for about $2,797. It's actually up slightly, about 0.73% from yesterday, but it's still down a painful 12% over the last 7 days. According to the data from CoinMarketCap, Ether is largely following the same downward sell momentum as Bitcoin. I just want to pause here for a moment. I know these numbers can be a lot to take in, and seeing the market in the red can be stressful. If you have any questions about what this all means, or if something isn't clear, please drop a comment down below. I read all the comments and I'll do my best to answer your questions. And if you're finding this breakdown helpful, please hit that like button. It really helps the YouTube algorithm show this video to more people who could benefit from it. Now, while the spot ETF market is seeing these massive outflows, there are other signs in the market that are worth paying attention to. The crypto futures markets, for instance, have started to show signs of stabilizing. This comes after a period of heavy deleveraging that started back in October. This suggests that while retail spot traders might be selling, the derivative side of the market is finding some sort of balance. It's a complex picture with different parts of the market telling different stories. Meanwhile, in the traditional finance world, it's a completely different story. Equity ETFs, those tracking the stock market, are attracting a ton of money. Investors have poured around $96 billion into stock ETFs just this month. That figure even includes leveraged stock products, similar in nature to these new crypto ETFs. This shows a clear divergence in investor sentiment. Right now, big money is flowing out of crypto and into stocks. This isn't LeverageShares' first rodeo with leveraged products. They already offer a range of leveraged ETFs tied to other hot sectors, like semiconductors, AI, baskets of blue-chip stocks, and even single stocks. So, they have experience in this niche. By launching these 3x and -3x Bitcoin and Ether ETFs, they are essentially giving sophisticated investors new tools to trade or hedge in what is an undeniably volatile market. For professional traders, having the ability to go long or short with leverage is a standard part of their toolkit, and now they'll have a regulated, exchange-listed way to do it with crypto in Europe. So, what's the big takeaway from all of this? The launch of these leveraged crypto ETFs in Europe is a major milestone. It shows that despite the current market downturn and retail fear, institutional players are still building out the financial infrastructure for cryptocurrency. It provides advanced tools for traders who understand the risks involved. However, the timing is critical. As Eric Balkan has pointed out, this could be a brilliant play on volatility or it could be a very poorly timed launch. For anyone considering getting involved with these products, it is absolutely crucial to understand that they are designed for short-term, daily trading. They are not meant for long-term buy and hold strategies, as the effects of daily compounding can lead to results that are very different from what you might expect over longer periods. The risk of getting wiped out is significantly higher. This is a developing story, and you can be sure I'll be keeping a very close eye on it. I'll be tracking the launch, the trading volumes, and the market's reaction right here on the channel. So, if you haven't already, this is your final reminder to subscribe and hit that bell icon so you get the updates as soon as I post them. We are all about real-time information here, and in crypto, that's everything. That's all the news I have for you today. It's a lot to process, I know, but it's an exciting time to be in the crypto space. There are always new developments and new opportunities emerging, even in a down market. Thank you so much for tuning in and spending your time with me today. My name is Dixon, and I'll catch you in the next video with more updates and insights. Take care, everyone.